Welcome once again to the Casper podcast, where we take a deep dive into blockchain technology and speak with those who are building the future of the decentralized web. I'm your host, Joe Benzo, and as usual, I'm joined by my colleague, Matt Schaffnit from the Casper Association. Thanks again for joining me today, Matt.
You know, I live for these moments, Joe.
I know you do. On today's show, we're talking with Aaron Klein about financial stability and the role of blockchain and other technologies. Aaron is a senior fellow at the Brookings Institution, where he focuses on financial technology, regulation, and macroeconomics. Aaron, thanks for joining us today on the Casper podcast.
Thanks for having me.
You just got done speaking on a panel about financial stability. What are the key takeaways you'd like our audience to know?
Financial stability is a concept that sounds appealing until you peer under the lens. The world runs on fractional reserve banking. That is, banks lend out more money than they have in deposits, and everybody's money isn't available at the bank if you all went at the same time. Once you have a structure like that, there isn't a perfectly stable system. And so the question, and I think we've had a problem when we've defined a goal that is structurally incompatible with the system we've designed to try to create that goal. What is a better framework that folks ought to think about is, what is a financial system in which during periods of instability, the system is able to still function, right? Your car, every time the check engine light comes on, doesn't immediately shut down in the middle of the highway. Right? You have enough fail-safes and redundancies to get to a safe place to fix it. And I think that's a better metaphor for what we're going for.
So in terms of stability, in terms of how to get there, how does technology come into play, and how are you thinking about things like blockchain? You mentioned AI. And do you see those as potentially useful tools that regulators could use to get a better picture of the health of these financial institutions?
Financial crises are like you're in front of a window and it's pitch black outside. If you jump, it could be 5 feet and you land, 15 feet and you break your leg, and 100 feet and you die. Do you jump? Hard question. I think of data, transparency, the mission of Actis as shining a light out the window to provide some information to guide your decision-making when you're up on the ledge. So that's how I kind of view and why I'm passionate about financial data and financial transparency and more information. One thing that was obvious as a veteran of the subprime mortgage crisis was the data was all there, but not collected and not shown clearly. And so folks didn't have the right view of this. Blockchain is a fascinating idea of an advancement, as I see it, of bookkeeping and recording. We ultimately are still using dual entry bookkeeping, which is an Italian invention of the 14th to 15th century. In fact, it is so endemic in our language and thought that we have a various amount of idioms in the English language based on this. Show me the books, cook the books. These are all concepts relating to the idea that we had dual entry books. The concept behind blockchain, which is really the antithesis of dual entry. Dual entry is you keep your books, I keep my books, you close your books, I close my books. Occasionally we open them and reconcile them. The idea to have a single book, not two, the idea that it is public, not private, is a very fundamental change with large potential positive consequences. And to my mind, a bit of an incumbent versus challenger model. You have to prove it's better. There have been other attempts to do a different method of record keeping since 14th century Italy, and yet we're still using largely that concept. So it still has some room to run, I think, to prove that it is better, cheaper, faster, more useful. But if it can, then it has a fundamental structural change in the recordation of everything, finance being a core element of how we keep our books. But there are many other elements of record keeping where blockchain could be transformative.
I'm also a recovering mortgage-backed securities professional. And something that you said really made me chuckle, which is like, all the information is there, which is not accessible, right? It's not digestible. You can't act on it in real time. And everyone likes to blame the regulation, right? But they bucket regulation in one category and they don't bifurcate it between the two kind of elements, which is the establishment or the writing of the laws, right? And then there's the enforcement side. And for me, when I look at algorithmic financial standards and contracts, whether they're on a blockchain or anywhere else that are accessible, This seems to me to be a path where you could actually enable regulators to access, digest, and help steer those decisions.
A couple points. Congress can write laws. In the laws, they can either write the rules, or they can require the regulator to write the rules, or they can make the rules optional and give the regulator the power to write them. Then the regulator has the job of enforcing them. So 3 distinct elements. In 1994, Congress passed a law called the Home Ownership Equity Protection Act, commonly called HOPA, and it required the Federal Reserve to promulgate regulations about high-cost subprime mortgages, something Congress was very concerned about in 1994. Guess when the Federal Reserve complied with that law and promulgated subprime mortgage regulations? Required by Congress in 1994. Take a guess.
After the collapse of the financial markets in 2008?
Very close. In 2007. 13 years after being required by law to write the reg that could have set rules to preclude this whole thing from coming into place, they belatedly finalized it. The die was cast. By 2007, it was just a question of when, not if. What happens when an agency ignores the law? In the case of the Federal Reserve, nothing. And so Congress is more structurally limited than people think in doing the rules. Secondarily, when you have rules, if they're not enforced, so what? I think anybody who's been a sports fan has been very frustrated when, in their view, the umpire or the referee has botched the call based on the rule. And that's what the supervision is. Fundamentally, Congress can't legislate judgment. Regulators need to be held more accountable when their judgment is flawed, and paradoxically more praised when their judgment proves correct. That's a very difficult role for the regulator, and I have tremendous sympathy for them in that space. Self-executing contracts have been promoted by some as a solution around this problem in that you avoid that. Other people argue that self-executing contracts exacerbate the problem because it doesn't allow the human moment to suspend the situation. One of my formative moments as a young congressional staffer was 9/11. And most people never thought of this fact of 9/11, but we remember the planes didn't fly for a week. Well, that meant checks didn't clear for a week because back then, paper checks had to be physically processed. And if checks aren't clearing for a week, banks don't actually know their balances and don't really know their reserve requirements. And the Fed kind of, to its credit, fudged it for a couple weeks and just created some very temporary authority because the rules are you have to know what your liabilities are. You have to have your balances equal to this reserve ratio. What could you do? The checks were piling up for a couple weeks. That's like really important, right? And so there are moments where you actually do want the human to step in and say, I know we have this rule, but like there's some crazy things going on and we need to suspend this thing. And that's an area where I do think blockchain has to think a little bit more about what that potential fail-safe is versus self-execution, because there are moments where we all step back and go, yeah, but we got to hit pause for a minute.
The circuit breaker, right? As human beings, we have a proclivity to basically go into a temporary euphoria or insanity, whether it's good or bad, and they're both extremes, and that's why we pull a circuit breaker and we say, hey, stop, it's not that crazy. Everyone cools down, the hangover subsides, the music dies down, things kind of come back to normal, right? Just like the water in the ocean when there's a storm.
If I told you September 12th, how many more of these types of terrorist events will we have in the next 20 years? I couldn't find a single person that would say 0.
So you spoke here at the Actis conference 1 year ago, and then again today. Is there something you're optimistic about in terms of the progress being made on potentially implementing these open standards?
I think Europe is really moving forward. I think the Europeans are acting on a lot of the insights gleaned from the financial crisis in a way that's better, frankly, than what we're doing. And in this scenario, I am more optimistic about what the Europeans are doing through the Gleich Foundation, leading economic identifiers, LEIs, and the power of standard settings is tremendous. The world works on 40-foot containers. Europe had to redo all their rail beds to meet 40-foot containers because we created the shipping box, and shipping box isn't in the metric. So the question will be, will the U.S. go along with the European standards since they're moving faster? Will we create our own standards and have dual standards, which is inherently less efficient, particularly in the global financial system?
Aaron, thank you so much for taking the time to speak with us. We really appreciate your insights on all these complex issues and really boiling it down to the essentials. And we'd love to talk with you again soon sometime.
It's a pleasure. Happy to join Casper's podcast.
So that's all the time we have today. We'd like to thank Aaron Klein, the one and only Alan Mandelowitz, and all the people that helped make this year's Actus conference a huge success.
And if you like these conversations, be sure to subscribe to the Casper podcast on your favorite platform. You can also leave us a voice message for a chance to appear on a future episode. And until then, keep building, and we will see you again on the next episode of the Casper podcast.